Couple of interesting companies that have recently broke news, as a matter of fact, on the value stock pick list this week. Tracey Ryniec, value stock strategist, here to fill us in on the details.
That's right.
First, let's go with this independent energy company, Harvest Natural Resources.
Yeah.
It's a new one that you've talked about. You've never talked about this.
No, and I keep finding these small little energy companies. It's interesting because they were founded in 1988. They're in Houston. Mm-hmm. But they have a big percentage of their actual reserves are in Venezuela. And
That's
a lot of companies have been down there. Obviously, they're a huge energy producer, but they've been slowly, being kicked out of there basically by the Venezuelan government, who is nationalizing all of their resources, essentially. That's not necessarily what's happening here, but Harvest did just announce that they have a 32% stake in Petrodelta, Venezuela, and they are selling that stake for $400 million. Now, this company has a market cap of $177 million, so you can see what a big stake this really is. They said they already got basically a check for $125 million, and then the other $275 million is subject to a vote by the shareholders, and also the Venezuelan government has to approve that. So they're still going to be waiting on that aspect of it. But this huge chunk of cash coming in, they're going to use it to pay off their debt, and then they're going to have a lot of cash on hand to basically decide where else they're going to start exploring and using that money going forward. So this year is going to be kind of interesting, this year and next year. You can see from the earnings estimates, there's only one estimate that we have because it's such a small cap, but estimates were already going up for this year. This cash is going to come in, kind of mess things around, and they're going to lose a lot of their reserves. They're going to have to go out there and do some more exploring in some of the other areas that they're in. But then next year you can see the analyst has a loss of 23 cents, I think, because of all of the stuff that's going on. But they're having this cash come in, so hopefully the management will know what to do with it. Also, another kind of side interesting thing, I noticed that a lot of the management team has been buying up its own shares, which is usually kind of a good sign because that means they're believing in whatever's going on at the company. Mm-hmm. So just another little tidbit there. The shares have been all over the place. They did plunge down. Whenever something's going on in Venezuela and this company is so focused on Venezuela, it's probably not a good thing, but now they're getting out. So get out with their cash, see kind of what happens in 2014. Like I said, they've been around since 1988, so management, should be pretty experienced here. And it's an interesting energy play, only trading around 3 times this year. Next year, a little iffier because they might not make any money. But, energy's big in the news. Mexico recently passed new legislation to open up their market. I'm not saying Harvest is going to go in there, but there are other opportunities out there besides Venezuela, obviously. So it's an interesting story. All
right. What kind of tidbits do you have for KKR and Company?
These are a big asset management company. They have $90 billion under management. They also have been around for forever. They kind of
1976, right?
Yeah, kind of famous in the investing world. I think they've been subject of a couple of books even.
This used to be the old Kohlberg Kravis Roberts company.
Yes, exactly. So
shows you how far back I go.
Right. Yes, a lot of people know that name. But yeah, they are also in the news because they just announced that they were going to buy a credit company that's kind of affiliated. It's called KKN, I think is the ticker. It's publicly traded. They're purchasing it for a little over $2 billion, but that used to be a mortgage REIT and then got crushed down in the Great Recession, obviously. And then they've been diversifying. Shares of that company have kind of come back. They went down as low as 45 cents, from $20 to 45 cents. Now they're trading around $9. KKR is buying them out to kind of pull in. The analysts do like this deal. Shares were up a little bit when they announced the deal yesterday from when we're taping this. But even before this announcement, the estimates were already trending a little bit higher here because the assets under management are growing. I mean, they're $90 billion now. They were $83 billion as of the quarter before that. Some of that is because their equity portfolio is rising with the stock market, but they're also getting a lot of new infusion of cash, they said, which is a good sign you want to see with asset management company.
Sure.
They pay a dividend, actually, 3.7%. So it's actually, pretty juicy dividend. It's fairly cheap, trading around 10 times, so you get kind of the growth in income, even though it's a value stock, which is a good sign. Earnings growth isn't so great this year and next year, but you're kind of paying for these other components of the story. And as you can see from the chart, 2013 has been really good for the asset management companies. The shares have soared, but like I said, it's trading around 10 times. That's still pretty cheap for, compared to the overall market, which is almost at 17 times now. So, these asset management companies, I like them with assets prices going up.
All right, do you own either of these?
I do not.
All right, check out other stock picks on our website, Zacks.com. If you're not there already, get on over with Tracey. I'm Terry Ruffalo.